So for our next segment, where we have Rob Weir, VP Corporate Development at Lithium Royalty, will be doing a fireside chat with Matt Gordon. LRC, or Lithium Royalty Corp, is a lithium-focused royalty company with a globally diversified portfolio of 35 revenue royalties on mineral properties around the world that supply and will supply raw materials to support the electrification of transportation and decarbonization of the global economy. Matt and Rob.
Hello, everyone. Right, lithium is the topic of this conversation. Why don't you kick off, give people an introduction to you and the company, and I'll pick it up from there.
Sure. Rob Weir. I've been with the company for about 9 months. I was an original investor back in 2018 when they capitalized the business in a private equity fund called Royalty Capital Partners, and then for the 20 years before that, in institutional sales, ran sales and trading for GMP and then Stifel Canada.
Did you work in London at all?
No, we had a business there though that was.
Okay, cool. Right, I'm going to ask you a question which most lithium investors must ask you all the time. Tell me it's going to be okay.
It's going to be okay. It's been a challenging 2023. Prices peaked in November of 22, and we luckily were able to take the business public in March of 23, and the lithium price collapsed. But we think, EV penetration is going to continue to grow. With that, lithium demand is going to grow, and so based on that belief, we put $50 million to work last year. So we don't look very smart today, but we think it's very counter-cyclical, and it's going to pay big dividends in the next 5-7 years.
Counter-cyclical. I hope we don't have many more cycles like the last one. So, it's a nascent space, right? It's a small space. It's very nascent. Is it going to find its feet and be a little bit more conservative in terms of the outlook around the price?
I think it is. A lot of the press reports on what Ford and General Motors are doing, but there's a lot of innovation. There's a lot of new models coming out. I think there's 650 different electric vehicles. Even 9 months ago, there was 25 countries that were 5% of new vehicle sales being electric. It's now 31. So that base is continuing to grow, and I think consumer adoption, because cost parity is almost there. So it moves in fits and starts. I think this was a cyclical correction and a secular expansion.
Okay. Let's talk about the company first, and we'll come on to the macro, because I imagine we could get lost down a lot of avenues on the macro and why demand will be fine and supply won't. Talk about the royalties that you've got in place. How many royalties have you got? How many are revenue generating for you now?
So we have 35 different royalties. We spent about $140 million US to build that portfolio, starting back in 2018. Obviously, a third of that was put out last calendar year. We have 3 producers, 2 in Australia, 1 in Brazil, which is Sigma. Sigma was a $105 million company when our founders purchased that royalty. It's been as high as $5 billion. It's somewhere around $2.5 billion today. And we have 3 really big assets coming on this calendar year. 2 brines in Argentina, operated by Zijin Mining and Ganfeng. And then another asset called Das Neves in Brazil, which is in that lithium valley. And they've been very creative to get their company funded, and they're going to achieve phase 1 production of about 150,000 tons. So We'll have 6 by year end.
Okay. You told us how much you've spent to date. So what's the revenue from the 3 producers and the 3 new producers when they do come online?
Last year, we did about $5.5 million US.
Right. What's that look like this year?
It'll be higher. It depends on the lithium price you use, but I think like 7.5 to 8. The big inflection point comes for 2025.
From where?
From those 3 assets I just talked about.
Right.
2 20,000-ton brines, then 150,000 tons from Atlas.
Right, and so what were your expectations when you've raised a lot of money, you've spent a lot of money. What were your expectations in terms of return profile?
I think the returns from the outset are still good. We're obviously very disappointed to be a public company and have the stock trade as poorly as it has. We believe the portfolio is still very much intact, and that belief has led us to put about $7.5 million into the market to buy stock, which I think is great from an alignment perspective. So I think the whole industry has pushed back 12, 18 months, if not longer, depending on your ability to access capital. So we have no debt and about $9 million in cash, so we're okay from that standpoint. But we're definitely behind where we thought we'd be when we went public.
Right, okay, so timing's everything. We all know that. We've been in this game too long to get too worried about it, but it's quite inconvenient for now in terms of the ability to go and raise capital to do what you probably want to do. Can we look at the rest of the portfolio? Because royalty companies are a hard one to evaluate. We know that from gold. In fact, we just had one up here. John Garofalo was up here a second ago. We've seen other types of royalty companies. When you get a big portfolio, it's hard for analysts, like I used to be, like you probably used to be, to actually get into the detail, get into the weeds, and try to work out what's real and what's not. So we kind of just go a kind of generic, broad sweeping valuation across the portfolio. Break down the portfolio in terms of either via stages or likelihood to get into production, i.e. generate you some cash.
Sure. I'd say Scotia would take a 10% discount rate across all 35 and come up with $12 Canadian. If I talk to Blair Levinsky, our co-founder, he'd tell you our NAV is something north of 1.2 billion. And I think the answer probably lies somewhere in between. But you can apply a different discount rate depending on your stage of development. And so our NAV, I think, is much higher than the current enterprise value of the company in the public market. But until our income statement matures, it's going to be very hard for investors to believe that. So I think once we get to 6 to 7 producing assets, we'll look a lot different if we're sitting here 12 months from now. But there's 6 analysts that cover it, and they all have different methodologies. But a 10% discount rate gets you to $12 today.
Okay. When you mention names like Ganfeng or Zijin, I get comfortable. They know what they're doing. Done it before. When you've got Western players trying to solve crack the nut, as it were, very technical metal, lithium, and certainly in terms of economic production, what does the rest of the portfolio look like in terms of their ability or likelihood of getting in a partner like a Zijin or Ganfeng? What's that look like?
That's a good question. Think companies like Frontier, who are based in Ontario, just brought Mitsubishi in as a partner. Mitsui partnered with Atlas Lithium down in Brazil. Right here in Quebec, Winsome Resources is trying to buy the Renard mine and infrastructure out of bankruptcy. So that could save them upwards of $500 million and accelerate their business.
Looks like a good deal.
Yep, I think it's a great deal. The second owner of some of these projects, or sometimes the Lundins have made a living out of it.
Yeah.
So I think Chris Evans and his team are doing something really innovative, and it gives them a 2.2 million ton DMS plant, allows them to theoretically produce about 300,000 tons of SC6, which is spodumene concentrate. They've got a lot of interest out of Korea and Japan in terms of offtake partners, and I think they're very interested in building their social license and capturing the whole value chain in the province of Quebec. So that's something that we weren't counting on until 2029 or 30 that's been significantly brought forward. And it's
right.
On an NAV basis, it's probably worth 140 million to us, and the market's giving us 0.
Okay. Some potential upside. I think we talked about it before. I think it's potentially very, very interesting indeed. We'll see what they do with it.
Agreed.
With regards to, again, some of those other names in the portfolio, they're being affected by the market conditions. Okay, broadly, I opened with tell me it's going to be okay, because lithium's been spanked hard. It's been went up to what, $80,000 October, November 2022, down at what, 12.5, 13? Where are we at?
The spodumene price got down to 850, and it's since come back to about 1,300.
Right. Okay. So, better. But where does it need to get to for most of these companies? Because no one's going to come stepping back until price kind of finds its level, right?
Yeah, you see a lot of different forecasts in terms of the incentive price required. I think it's probably north of $2,000 a ton. We peaked at 8, we bottomed at 850. But I think that's probably a good guesstimate of where it needs to get if we're going to replicate the required supply chain in North America to compete with the conversion capacity and the vehicle manufacturing capacity that resides in China.
Are there too many companies?
There's too many EV companies, for sure. We're the only pure battery materials royalty company.
Right.
We talked backstage, Appian just put $20 million into Lithium Ionics project down in Brazil. So probably not great for us as a competitor, but it's a good validation. We have three operating partners, one being Sigma that's in production, the other being Atlas, and then M4E, a private company. So it's a great jurisdiction to get permitted, and so that was good to see.
Right, and because you see this across the board with lots of metals, lots of commodities, where there's oversupply. Most of them will claim that there's going to be undersupply because there's the demand is going to outstrip the production. What's the story in lithium? Just get into the macro now. What's the reality of a lot of these companies getting into production? What's the sort of knock-on effect in terms of for price going forward?
Yeah, it's these shortages are always much talked about, but rarely seem to happen, as you alluded to. I think the market's in oversupply right now. It's a function of coming out of the pandemic. Spodumene was at $8,000 a ton, so you had a lot of very low-grade assets in China come into production. You had some tons come into production in Zimbabwe. So I think those have run through the supply chain. And so as we move throughout 2024, I think we'll get a better look at what the real price is come Q3 and Q4.
Right, and obviously that's a knock-on effect in terms of companies' ability to continue raising capital in the market, because that whole momentum sentiment component is critical to most of these small companies. Where's the kind of big moves going to come from in the sector in terms of the North American critical minerals list, for instance? Is there going to be a bifurcation in the market around pricing in terms of this east-west divide? Do you expect anything there?
Well, Fast Markets has been talking about regional pricing, much like natural gas. So I think that could be a really good evolution. Recently, we've seen 4 of the major producers auction off uncommitted tons. I think it's north of 50,000 tons, and those prices were 20% above sort of prevailing spot prices.
Really?
So that's a good price discovery mechanism.
That's a new mechanism.
In the last 6-8 weeks, yeah.
Okay.
Well, actually, sorry, they've done it in the past. They'd stopped doing it, and they restarted it in the last 8 weeks.
Interesting. Do you think that's going to carry on like that?
Yeah, Albemarle is the largest producer in the world, and they're doing one a month, I believe. So Pilbara has done it over time. So I think it'll continue, and I think it's very helpful.
Right, and we talked about this earlier on a panel today, where's the money coming from for all of this? Okay, because people have exited, funds have exited, institutions have exited, retailers exited the space, and there's a lot less capital around. But what it has seen and necessitated is the move back upstream by OEMs. We've obviously Piedmont in your space, for instance. We've seen Samsung in the nickel space. We've seen an absolute need for this to happen. Otherwise, production is just not going to manifest. So, what do you think around industry moving back upstream, or what are the other sources of capital available to companies?
Well, we've been a source for sure. Mitsubishi, Mitsui, Albemarle put $115 million into Patriot, and they've had phenomenal success at Corvette. But your traditional sources of debt and equity are hard to come by. So higher prices definitely solves that, but industry is a big part of it. The IRA has been a big part of it. GM's helped capitalize Thacker Pass. The DOE, I think, has finally figured out their loan program to help them put their plant into production. So there are sources of capital, but you're right, it's hard to come by right now. So industry is doing, I think, as good a job as possible.
Right, so given all of the above, and given where you've come from, in terms of you're not where you want to be, that's kind of clear. What's going to be the kind of big move, big catalyst for you, or is it just going to be a steady grind?
For us specifically, it's getting more of our operating partners into production, and 3 is good.
Can you influence that? Do you advise them? How close are you to that?
I can't. Our founders can. Mark Wellings is a geological engineer. Ernie Ortiz has followed the space for a decade. Blair Levinsky is sort of a self-taught expert in battery materials. So I think they have, Ernie has a very good rapport with all of our partners. But they have very capable operating staff, technical staff, mining engineers. So I think they're pretty well looked after, but I think there's an ongoing dialogue there that's very productive.
Right, and sorry, I interrupted you there. I mean, what else is going to take to actually get people looking in at you again?
Well, as I said, getting more operating partners over that line to start paying their royalties. If there was ever some unforeseen event at one of the large high-grade producing mines in Australia, if Chinese lepidolite there was environmental inspections, those mines were taken offline for a while. So if those integrated mines stopped producing because of the toxic tailings, that would result in greater demand for Australian exported hard rock. So, but I think continued progress on EV penetration and more of the existing fleet being replaced with EVs is the best long-term value creator.
Right, and where does recycling come into all of this?
That's another really good point. Recycling can now recover 95% of what's in an electric car. So on that basis, over the life cycle, an EV is 70% more efficient. You produce 70% less carbon, even though you produce more upfront. So that's one of the co-founders of Tesla at Redwood Materials in Nevada, and they've raised a lot of institutional capital to build that process down in the desert there. So that's something that's starting to get more press, but it's a pretty important driver.
Okay, so the future's bright. Hang in there.
100%.
It'll be okay. In fact, there might be some bargains to pick up. You could argue that, couldn't you?
For sure.
Thanks very much. Appreciate the insight. Thank you.
Appreciate the time.
Cheers.